Hello traders, the title of the video is Case Study WXY Elliott wave pattern tips and tricks that one must know. Alright, so you want to learn and master the WXY Elliott wave corrective wave, alright? So we want to look at one specific case, alright? So in order to master one subject, one should practice, okay, see different scenario, gain more experience, okay? First, different challenges, overcome those challenges, alright? This is how you're going to master the WXY Elliott wave, okay, pattern. So this is one example here. We want to look at this particular case. I found it interesting. I hope you too will find it interesting, alright? I need to remind traders that this video is for educational purposes only. It's neither solicitation or an offer to buy or sell any financial instrument. Alright. So here it is. So we have a trending first. So the WXY is a corrective wave. So whenever you are talking about a corrective wave, we ask the question, what is it correcting? It must correct a motive wave, a trending phase, an impulse wave. Alright. We can have the WXY, therefore, because it's a corrective wave, we can have it in a second wave, in a fourth wave, and during the corrective phase of an Elliott wave cycle. So those are the three times when we usually see, okay, the WXY wave pattern. But I need to remind traders that when we are talking about WXY wave pattern in the second wave, very often you will see that WXY corrective wave in the second wave when we are dealing with a higher degree wave count. More frequently on a higher degree wave count, you may see that the second wave may be, okay, a WXY. Right? So just understand that, right? The reason is, you may say why, the reason is usually, we know that the first wave is a signature of the bulls, alright? So the bullish trader buy during the consolidation phase, and then the signature of the bull is the exhibition of the bullish force is now breaking the border consolidation. We have the first wave. People want to buy, they don't want to waste time because the WXY wave pattern takes a long time to be formed. I'll be talking more about this pattern because a trader did ask me to record a video about this subject. This now started it now. You see here, 1998, it has ended in 2009. Now, make the calculation. How many years? Many years, isn't it? Yes or no? All right. 11 years for a pattern to be completed. So that's why I was saying to you that very often you may see it in the second wave, but when we are talking about a higher degree wave count, especially on a monthly chart or yearly chart. For instance, if you're on the hourly time frame, lower time frame, you may not see it very often in the second wave. All right. Another place that you can see is in the fourth Elliott wave. You may see it sometime even on the daily chart or the hourly time frame during the fourth wave. You may see that pattern. All right. But the best place that one we usually see, all right, the WXY wave pattern is during the corrective phase of an Elliott wave cycle. So 1, 2, 3, 4, 5, motive wave is completed. The correction is beginning to complete the Elliott wave cycle. If that correction is prolonged, because it's a complex wave, we may see three corrective waves that are combined together, forming the W, the X, and the Y. Am I talking too much today? All right. Trending first, this is move down, move up, move down. This is the W wave. This is a case study. So what I say to traders, okay, we will be talking more about this to help you to understand because some traders are very rigorous, so they want to see every move. So you say, well, so what I say to you, sometimes if it's too much for you, you don't know, it's not making sense. Well, just think of like a child. What did the price do from here to here? It went down. Okay, good. It went up. Good. It went down like a child. Right? Though there were other wiggle, you want to focus on, okay, right? the main direction of the price. And then if you want to go deeper, you may go a little bit more to find out the internal way of that move down. All right, if you have time, that's it. But looking at it like this, very fast, like a chart, it went down, it went up, it went down. W wave. Now, but remember that if you were here, you will not be talking about W wave. Now, you understand why we say we use the word, the area of breakout is dynamic, it's one step at a time. At this point in time, you don't know whether it's going to form a WX wave or not. All you see is a corrective wave bringing the price into the zone of 78.6% Fibonacci retracement of the trending pair, the zone that is considered, in theory, as oversold. People are trying to buy here because they believe that the correction has ended. Minimum price move is free. They draw the line, bullish, prior to bullish signal above, prior to bear signal below. So, no more reaction. They didn't talk about W here. They know that a correction is likely to end in 2000. They're expecting a new trend. That trend has failed, forming 1, 2, 3. So now the bell will start ringing. So you say, all right, 1, 2, 3, 1, 2, 3. Is here a flat correction? You can think of a flat correction here. So those are the patterns that may come into your mind. You may think of a flat correction, expecting 1, 2, 3, 4, 5 move down here. You may think of a WX wave. All right, you see now? Because the area we call is dynamic one step at a time until the pattern is completed. But we are ready for all the scenario. So in order to forecast the market using the area wave principle, one should not have a single viewpoint. You should have multiple viewpoints. What are the scenarios that are likely to take place? So you have plan A, plan B, plan C. Right? But if you only think that it's going to be definitely flat correction, it's going to be definitely WXY, and then the price prints something else completely out, then you say, oh, wow, what's going on? But the trick that you can use here, see 1, 2, 3, or you may even think of a zigzag pattern here, blah, blah, blah. All right. Very, very important, which I was talking about at the Pro Traders YouTube channel, is that price action Fibonacci trading. Did you watch that video? If you haven't, or if you already know, that's good. Price came down like this. Professional, we use Fibonacci retracement. This is about Fibonacci price action trading, and we highlight the 50% Fibonacci retracement level of this price move from here to here. As the price goes up from here to that 50% Fibonacci retracement level, which I'm going to color now into pink, that's exactly what has happened. You need to know the Fibonacci price action trading. Now, I'm shouting to get your attention. I'm not trying to be rude, all right? Here it is, exactly what it did. 1, 2, 3 to that zone, forming the X, which is a failure of a trend. That's why I say to trader, you may not heard about it before. You may say, Joe, you are the only one talking about the X as a failure of a trend. Why? Because there was a trend in fact, price pulled back to 78.6% level in the shape of 1, 2, 3. People will be expecting a new trend here. But that is normal. It's normal that they expect a trend. Investor, blah, blah, blah. They check the fundamental. They expect a new trend. The new trend did not happen. It's a failure of a trend forming the X wave. But you must draw that Fibonacci extension, Fibonacci retracement, correction, retracement, that move from here to here. You start going now, do that. And here it is. You'll be looking for, give me say to trader, if you were here recording a video like myself, you say prior to bullish signal above 2700, prior to bearish signal below each. Yes or no? All right. Okay. And now if it's coming down now, which level should you watch? Trader, the subscriber or day pro trader know it. The 61.8% Fibonacci retracement of the move from here to here. Now, this is something you can use to forecast the market. All right? That will be the level that you must watch. So you are taking it one step at a time. So as the price are coming down, you say, where is it going? Professional will tell you. That that level is this one here, 61.8% Fibonacci retracement level. That's the first target level. Can you see? Price came down from that 50% Fibonacci retracement zone of the move from here to here. It came down. Look, that's where it found its support, 61.8% Fibonacci retracement level of the move from here to here. That's the first reaction. People take profit here. It bounced up. Now the common sentence is kaput. Now they bring it down. We know it. So professional trader, he will likely to find a support here. He will bounce up a bit. And if it break below that pink line, the 61.8% Fibonacci retracement level, where is the next target? They know this one here at $11. That's exactly where they did change direction. Now, so you may combine, okay, the WXY wave pattern with the Fibonacci price action trading. Watch the full length of any video that I title, all right, price action Fibonacci trading or Fibonacci price action trading at dayprotrader.com. Find time, sit down, don't let anybody disturb you, and enjoy it. All right, that's it. So we can use, okay, Fibonacci price action trading and the WXY, okay, wave pattern. So the pattern is completed here. Now, I will be recording another video very shortly, all right? But just to mention to traders that very often at the end of the WXY wave pattern, we are likely to see, okay, a bullish chart pattern. So if the WXY wave pattern is completed after a bullish trend, at the point where the WXY wave pattern is being completed, very often, not always, not guaranteed, we are likely to see, all right, a bullish chart pattern. But the inverse is also the scenario where after a bearish trend, we have a WXY wave pattern. When that WXY wave pattern is completed after a bearish trend, we are likely to see at that point in time a bearish chart pattern. So I'll be talking more about it. So here it is, we have a bullish trend, WXY wave pattern is completed here. All right, we are likely to see a bullish chart pattern. Where is it? A double bottom chart pattern is completed at the point where the WXY wave pattern is completed. So traders that are following us at 24 Stock Trader YouTube channel, you know that say to you that a simple way to quickly improve your swing trading is to just concentrate on trading the double bottom and the double top chart pattern on the monthly chart. Have I said that? All right, so we have said it, okay? So this is it. And just when you see a double bottom, a double top on the monthly chart, use a top-down trading method to trade it. So even if you don't know about the WXY pattern, you are likely to catch this move because you will be trading what at this point in time a double bottom chart pattern on a monthly chart. And here you will be trading a double top. Here it is, a top and another top where another X is completed. So going back to the topic again, I'm talking a bit too much now because it's very important sometimes to talk. So here it is, we have a trend in first, and then we have 1, 2, 3 W, 1, 2, 3 X, and then 1, 2, 3 Y. So here we will be expecting what? Again, a trend. Here people were expecting a trend. That trend had fell, forming X. Here again we are expecting a trend. If that trend fell, what will you call it? X. So now I have another one here. This is another X here. So is it X? Yes, it is X. Because people are expecting a trend here. It's X, it has fell. So what you need to understand is that the S wave is connecting all the time to corrective wave. Though they call it 1, 2, 3, we'll be going a little bit deeper into this because of the observation that I have made, the things that are going on when we talk about real, nitty-gritty, all right, about trading the Elliott wave or the WXY Elliott wave, corrective wave, all right. The X connect to corrective wave. So this X here, all right, is connecting the first corrective wave with this one. Now this X is now connecting this corrective wave and this one. All right. So correction just going on. WXY pattern is completed here. People are expecting a trend because we can use the WXY wave pattern to pinpoint reversal point. So there was a trend, a bullish trend. People were expecting a trend here, did not happen. Now they're expecting again here, all right, and so on. So when we see the WXY wave pattern is completed, we'll say, all right, that complex correction is completed. But a correction can be prolonged. Now here it is. This move is not a trending fair, though it looks like a trending fair. We can count 1, 2, 3, 4, 5 waves here in this session. Some of them may say it's a trending fair. Doesn't matter. It's not a bad mistake to call it a trend because it's not going to cost you money. Yes or no? All right. It's not a stupid mistake. All right. So even if you call it a trend, well, it's not a bad mistake, but it's not a trend because it did not go above the 138.2% Fibonacci extension level of the prior trend. That's what I will say to you, because when we consider the higher degree wave count, all right, we will call this one first wave of a higher degree. Oops. Oh, let's color that into black. That's the first wave of a higher degree. And so far, we are still in a second wave of a higher degree. The WXY is completed. We have another S. So it's a correction still continuing now. We didn't have a new trend after that. All right. So here it is, a complex, so prolonged. So WXY wave pattern is completed. We say, or a possibility that we have a new trend. Here it is, didn't break above it. So you will be able to trade this one, which is okay. By the way, traders who watch that video, okay, the Fibonacci price action training or price action Fibonacci training, will know how to trade this session again. There are levels a professional watching. So one of those levels, that's what I say, subscribe to all our channel. That's it. Doesn't cost you a penny, it's free. Just subscribe to them and listen to my funny accent when you feel like, okay? Oh, George. Oh, yeah. Listen to that funny accent, you see. That level here, there's one level here. So one trader say, cut the jokes. And I say, oh, George, you are kidding me. We have to make a bit interesting. So this one level here, if I came down, 78.6% Fibonacci retracement, or the move from here to here. Okay. All right. Here it is. All this key level, the previous 50% level, the 61 point, all this level, this is brace above this one, target is this one here. All right, this resistance, that's where it stopped, now forming a double top. Now, if you brace above that level and find a support, we work the 138.2% Fibonacci extension level. And so on, and so on, and so on. So now this is the S, another new X wave. All right, so we understand. We will put here, I don't want you to get confused, so here it's going to become a bit complex to some traders, what I'm about to talk about. So this is a W here. Is it confusing? Why this is W? This W is our previous WXY. So the black W here is all this price action here. This 1, 2, 3, 1, 2, 3, 1, 2, 3. That is forming that W now. So we have seen a WXY wave in red completed here. That red WXY, which is completed here, is now our new W wave. Are you getting it now? So we have a new W wave, the black W wave, followed by the black S wave. We are now in the Y. Okay, so I put it here before. Let's remove that. Are you getting it now? Or is it too much for you to take in? All right. Take a break, all right? Take a break and come back later. And you catch a wave. Take a deep breath. It's not too much, okay? All right, so all this session between the two vertical lines, W black, is session X, the black X. Now we are now in another 1, 2, 3 move down, forming the Y here. Now, I know what you are thinking. You may say, why this X is not 1, 2, 3? That's a very good question, because it's a failure of a trend. Sometimes you will see 1, 2, 3, 4, 5. It may not be 1, 2, 3 like this, but because it's a failure of a trend, we cannot call it an impulse wave. It's a corrective wave. So, to answer the question that a very interesting question that a trader asked me, say, why do we have a triangle in the Y wave? It will be 3, 3, 5, but it's not, because now the attention is on the number 3 as a corrective wave. So the WXY wave, the critical point, the joint is the S wave, connecting one corrective wave and another corrective wave. So here we have the bigger WSY, which is in red, forming the W black. Now the S wave black is connecting that first W black to the new Y wave right here. So the key point that you want to understand is S wave joining two corrective waves, and you will be all right. And now if you keep doing this, if you have multiple correction going on and the price is not trending, you will be able to see another S wave again. So all this move, blah, 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 W, S, all right, Y, and so on. And we can have another, now, the complex way, because it's a complex way, we can have another WSY, and we have a bigger WSY, okay, wave pattern, adding on. So the key point is to isolate, okay, the S wave. First S wave connecting what and what, second S wave connecting what and what, and we can break them down one by one. So this will conclude our discussion about case steady WXY Elliott wave pattern, tips and tricks that one must know. So right now we are expecting it here to come to this session in normal condition. You can turn around before that. But just gently watch the support level, 1700, another one, $17.10. The next level is $11.10. All right. So this was the professional doing here. That trend, in fact, we are still in the second wave of a higher degree. That second wave of a higher degree is not yet completed. And if it come here, we'll be expecting a third wave of a higher degree, as we were expecting it here. So this was the third wave of a higher degree expected that has failed. All right. Okay. The trend did not happen. And again here, we'll be expecting again, or will this Mattel stock, an American stock, EPIC MAT, Mattel Incorporated, continue to consolidate, forming a gigantic consolidation. So trader will begin probably to sell signal, all right, in this zone of $43, and will be looking for opportunity to buy in the zone of $11, and the midpoint target will be somewhere in the middle here. All right, of it's $26. So the strategy that we must deploy is a consolidation strategy until it breaks above that gigantic consolidation. Have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. If you find this video truly useful, please give us the signal, thumbs up, all right, please. If you think that is another useless performance, all right, give us the signal, thumbs down, please, all right. If you think this is an essential tutorial, feel free to share it with your friend on Google+, on Reddit, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TFCW24 traders talking about case study, WXY Elliott wave pattern, tips and tricks that one must know. Happy trading to you all, and speak to you soon. So we have been talking now for 24 minutes. Is that too long for you? All right, we try to cut it down next time. Okay. Thank you.